Hi, I'm Mark Walker. I'm the editorial director here at the Fintech Times. Fintech Times is a company founded in 2016 and is the world's first and only fintech newspaper. We report on the latest and brightest news from around the world. We're really very pleased today to be talking with Sam from Digital Asset Management. Good morning, Sam. Perhaps you could start off by giving us a quick introduction of yourself and the company.
Yeah, good morning. Just once again, thanks for having me. I really appreciate your time today. Sure, I'm happy to give you the elevator pitch on myself. Quite used to that. I've got that pitch down in my back pocket. So my name's Sam Buxton. I'm born and raised in Gibraltar. When I was 18 and I was about to go to the UK to study either marketing or math, one of the two, I was offered a full basketball scholarship to go to America and play basketball. And I did that. I left in 2008. I was in the States for 6 years, studying finance and playing basketball. The first 4 years of which I was a full-time college basketball player and student. And then my last 2 years in the States, I was working for a startup bank. I eventually made my way back to Gibraltar after school to work for a wealth management company called Plurimi in 2013-14. The head of portfolio management there, Martin, sent me to London to the Bloomberg's annual technical analysis forum to do a report on Bitcoin, the future of money, and whether it was something that we wanted to have in our portfolios or not. So in 2014, I could show up in London and Bloomberg's conference, and I meet a man called Dominic Frisby, who wrote his book on Bitcoin, and I was asking questions, interviews and whatnot. And I came back to the board at the time and I said, no, we should not invest in Bitcoin. And that was that. It was a 7-page presentation to the board of directors there. And in hindsight, even if I would have said yes, I was a junior analyst, I probably wouldn't have got a look, and there wasn't any institutional infrastructure at the time anyway. But what it did do was it was my introduction into the space of blockchain and cryptocurrencies. And I fell in love with the white paper, the Bitcoin white paper, and I jumped into the space. So much so that it sort of definitely made me look into working for fintech companies, and I started having a look around what was on the market. I left my current job as a junior equity analyst to work for a startup bank in Gibraltar at the time. Eventually left that bank because I was poached by a company called Wavecrest that was issuing 95% of the world's prepaid Bitcoin cards at the time out of Gibraltar. Now, this was the only company in Gibraltar at the time to be working with cryptocurrencies or cryptocurrency products. This was 2016-17. And then in 2017, the way things aligned was once in a lifetime, in my opinion, but the Gibraltar government announced it was going to be rolling out a regulatory framework for DLT businesses, distributed ledger technology businesses, or cryptocurrency businesses. So at that time, I was already 3-4 years vested in the space, and my small country and jurisdiction decided it was going to roll out the first regulatory framework in Europe and one of the first in the world for an industry I was super passionate and invested in. So myself and a partner who worked at Wavecrest at the time, my colleague, we decided to leave our jobs and set up Digital Asset Management Limited to specialize in something that where at least we thought there was a gap in the market at the time, which was custodianship of digital assets, as well as broker-dealer services, helping individuals buy, sell, and manage their digital wealth. So that's sort of how I got into the space and sort of the early inception of Digital Asset Management, the current company.
Yeah, okay, so really interesting sort of background, as you say. I think you're possibly the first natively born Gibraltar that I've interviewed, which I think is another amazing, interesting thing. Obviously, we hear a lot about Gibraltar, so it's really interesting to hear the sort of story from the early days and how sort of they sort of really seized the opportunity to make a name for themselves in that sort of space. Presumably, as you said, you talked about how you sort of got into crypto and that. The thought behind DAM and setting it up was, as you said, it was all about custodian. So how did that start off, and how did you sort of get it actually running and start getting people interested in using the platform effectively?
Yeah, interesting. So quite honestly, there wasn't a platform at the very beginning. We were using hardware devices, offline cold storage hardware devices, and we had the private keys distributed in several locations within Gibraltar in highly secure locations. A bit gimmicky, but sort of inside the Rock of Gibraltar was sort of was the pitch at the time, right? And we were going for a DLT license application. So the first 13 months after we left our jobs was going through this rigorous license application. There's been hundreds of applications since. There's only 13 DLT licensed and regulated companies. The GFFC in Gibraltar have been highly selective on who they've bought on. We played the local card. Look, it is what it is. If we were going for a license application in New York for a bit license at the time, we would have been laughed at. But because we're the local team, we had leeway. They worked with us. The regulators were fantastic with us in the early days. They really helped us get to where we needed to be. But the other DLT licensed companies, for example, to give you an idea of the quality of the applicants, are the likes of eToro X, Wobi, one of the biggest exchanges out of Asia, CEX, one of the biggest exchanges in Europe and the CIS regions, Bitso, one of the biggest exchanges in Mexico and South America, that just raised finance at a 2.2 billion valuation plus unicorn status. So, and the list goes on. And then there's us, and we're this startup with this really prestigious DLT license that, as of sort of a year and a half ago, we started becoming a profitable organization, and we're starting to scale. But it was, going back to your question, sorry, the beginning was custodianship, and then broker dealer services was the second service, where we were going after high net worth individuals who wanted to invest sort of 50K to 100K into the space, which was a very difficult pitch back in the day.
Yeah, I can imagine. And obviously, as you said, you're doing that without a platform. So it's probably quite a people orientated company at that stage, where individuals had to go and pick up the phone and talk to people and say, look, this is what it's all about. This is what a digital asset is. A lot of education and that sort of stuff. Absolutely,
man. Education was key. And we were brokers. Like cold calling, trying to get people into the space, selling. It was a grind, man. The first year was a grind. It's not what we do. We don't do so much of that anymore. There was a moment of enlightenment, which changed the direction of the company. And I'm happy to explain what that was, if you like.
Yeah, no, that I mean, I think that's the sort of the pinnacle, as you say, starting off with cold storage, which, you know, most people would potentially know about, but obviously nowadays it's much more about the retail space. So I'm assuming that that's kind of more the area that Dan sort of moved into. What I'm more interested in what the trigger was for that, and then how you managed to do it as well.
Yeah, so we became a crypto payments company, essentially. That's what we brand ourselves as now. That's what we're currently raising finance on Crowdcube. As you know, we're doing our pre-series A. We're live on Crowdcube for another 15 days. And the pitch is, and our current branding is, we're a crypto payments company. The moment of enlightenment was when we had a big organization, a big entity call us, picked up the phone, couldn't believe who it was, more than 1,000 employees. And they wanted to know if we could set them up with a wallet to receive Bitcoin for payments from counterparties that just prefer paying them in Bitcoin. And the first payment coming in was over €1 million. So my question to them was, oh, hang on a second. You just want me to set up a wallet, receive this Bitcoin for you, sell it to euros and send you the euros? And they were like, yes. And I was like, brilliant, because that's about all we can do. And I always say that because that is exactly the words that came out of my mouth. That's about all we can do for you. So that works just right. So we did that, charged them a spread. That's what we charge, a spread fee. And that was the point when we were like, wow, this is payments, guys. This isn't wealth management. This isn't managing individuals' digital wealth and grinding. This is trying to bring on some, Fortune 500 companies, big institutional flow, that just find it easier to receive payments in cryptocurrencies from, international markets, because payments can be challenging still to this day.
Yeah, I mean, absolutely. It's still, if you look at the fintech space, which is obviously where we play, payments dominates that, especially in the Western world, by sort of 80% or so of fintechs are all about some form of payments or facilitating some sort of payments. And as you sort of mentioned, cross-border is even with not traveling and all this sort of stuff, cross-border payments is always going to be a function. The ability to change between currencies, whether it be fiat or digital, is kind of where it's at, really, isn't it?
Absolutely. There's a massive movement right now in stablecoins. Stablecoins have exploded the last couple of years. which are cryptocurrencies that are pegged to underlying commodities, or like, for example, the US dollar being the most popular of which. And it sort of takes away the argument that cryptocurrencies are no good for payments as a use case because of the volatility. Well, not with stable coins. And we've seen really big companies such as Facebook take initiatives to try and launch their what is now DM, their stablecoin product, which could be hitting the market in Q1 apparently.
And obviously we can also add into that the central bank digital currencies as well, and everyone is it's very much the whole market has very much evolved away from just what we used to call cryptocurrencies, Bitcoin and Ethereum, into a multitude of different types of digital currency. And obviously there's a little bit of difference. So how does DAM how are you dealing with that? Are you keeping on top of hundreds of thousands of different coins? Are you trying to, keep into specific areas? What's your sort of current sort of situation?
Yeah, very good question. We've had an increase of stablecoin trading to the point where it makes up like maybe 70% of our business right now, because we brand ourselves as a crypto payments company, of course. What we're doing to prepare for that shift and adoption is we're going for multiple licenses that facilitate traditional fiat management and movement. So we're going for e-money institution license, payments licenses, credit institution licenses, banking license eventually. So we want to build an infrastructure that really captures or prepares us for future regulation that might capture stable coins and traditional regulatory frameworks. And yeah, we're just staying close to market trends, because we really feel like we're well positioned to capture large market share if and when Facebook launched DM, if and when Goldman Sachs launched there, or whoever it is, whoever the biggest platforms are going to launch stable coins, if it's WhatsApp or LinkedIn, it's going to happen. We feel like our infrastructure will be easily adapted to sort of list those tokens within our ecosystem. So now we can acquire customers from those platforms and partner with those platforms. I think DM, Facebook's project, for example, they're already open. They already have a form that you can sign and fill to become a partner for when that token does come out. So if something like Facebook's DM is so powerful because it brings, I don't know, 1 billion people into cryptocurrency overnight. It's crazy.
Yeah, absolutely. It's the going from sort of a niche offering to a few people in, the perceived tech scene that know a bit about what digital currency is, moving to sort of widespread. I'm guessing that's also a lot of the reasoning for repositioning DAM into more of a retail space as well, so that you're a bit more well known and a bit more sort of aware to, the individuals that are buying products through some of your partnerships and your merchants you'll be working with.
Exactly. Yeah, we've traditionally been B2B from the early days, or at least high net worth individuals, which isn't like it's not retail space. But now we're launching DAMX, our retail application, and it's exactly why you say we feel like there's going to be opportunities to fast track mass adoption with these big announcements coming up. And we feel like we have a retail application in the space at the time, we could benefit from that for sure. There's also because we've been building a banking infrastructure for our B2B business, we quickly realized that launching a retail application wasn't going to cost us too much more. So we reinvented ourselves a little bit with the mini pivot into the retail space, but we're super excited and passionate about it. The B2B business, our B2B business is growing. It's a moving train. It's not slowing down. So it's also a matter of creating new revenue streams for the business and diversifying, and not just being reliant on our B2B vertical.
Yeah, and talking a little bit about sort of banking licenses and that sort of stuff. Obviously, you've got some really large challenger banks or bank challengers, neobanks, the Revoluts, the Monzos, specifically from the UK, and many others that are sort of springing up from around the world. Do you foresee you entering into a competition with them as they start potentially looking more into cryptocurrencies, or are you thinking that you're going to carve out a niche with starting with cryptocurrencies and moving into traditional banking sort of areas?
Yeah, good question. I think we're definitely going to be competing with other challenger banking applications at a certain point in time if we get it right. But our niche, funny enough, isn't going to be cryptocurrency. For Damex, our niche isn't going to be cryptocurrency. It's not going to be challenger banking services. It's going to be connectivity, connecting with people and connecting with the world in a really unique way, which is initially by tracking people's steps and spend activity and rewarding them for how healthy they are and how healthy the decisions are in life, and then connecting that with sustainability by planting trees and doing things that are good for the world as far as like cleaning the oceans, and charities are concerned when they hit their step milestones. So I know that sounds a bit out there, but it's actually our MVP model for what I've just explained is as simple as this. We're going to track your steps from within your challenger banking application. If you hit 300,000 steps, or as you hit your step milestones all the way up to 300,000 steps, you'll get a notification. Hey, you just hit 100,000 steps. Congrats, Sam. You now have 1% more cash back for the next 30 days. You now have 0%. You have free trading for the next 30 days. You've just received an NFT airdrop. Congratulations. You've just hit 300,000 steps. We've just planted a tree. You've just hit 500,000 steps. We've just planted 2 trees. And then it builds from there, right? There's so much we can do within a smart finance ecosystem, but we really feel like we're building a platform that can make a positive change, and that's going to be our niche: connectivity and positive change. And then we'll educate our ecosystem on the potential banking facilities we can give them, the cryptocurrency trading, all that'll come. But yeah, I think that's what's going to set us apart is connectivity.
Yeah. Okay. Interesting. Sort of wrapping things up a little bit now. I'm thinking of obviously about what you've just said, and the sustainability. Obviously, a very big subject at the moment. Lots of other neobanks are, trying to get into that space as well. Sounds like linking it to sort of steps and health and activity perhaps harps back to your basketball sort of roots as well, and your keenness in fitness and that sort of stuff. Thinking obviously at the moment, as you said, you're currently raising for the next 15 days, I think you said, on Crowdcube. Is that investment looking to achieve this sustainability goals in the next sort of two years or so, or what's the investment looking to facilitate at the moment?
Yeah, so we were targeting a £1 million raise. We've overfunded now. We're on way to £1.2 million raise. We want to try and get to as close as £1.5 million as possible in the next 15 days, which is remaining in our Crowdcube campaign. We've had close to 600 investors, which is amazing, and I'm super proud of that number. Like, unbelievable. I didn't think that would be the case. So a little bit overwhelmed to see that our starting community is going to be maybe close to 1,000 investors. Those are our future ambassadors. This is the community that we rely on to give us feedback to grow the product, and they're going to be out there evangelizing our product in the market. It's overwhelming to think that that's happening. It's a success story in its own right. But aside from that, what's the money going to be used for? Well, we're going to, as I mentioned earlier, we're going to be going for other licenses. We currently have an agency e-money institution license in the UK, but we eventually want to go for our own full EMI license. And I'm having initial discussions already for a banking license. With licenses comes regulatory capital. So funds that need to be locked up in your bank, or at least readily available in sort of money market products or just liquid assets. And so that I'd say like 50% of the cash we're raising is going to be put into regulatory capital, and then the other 50% is going to be used to grow our product and then human resources and legal fees.
Yeah, absolutely.
So none of the raise currently is going to be used in customer acquisition. Because we're a profitable company already, and we're generating good revenues, we don't need to raise as much as a typical, fintech concept would need to at this point in time, because we're netting really good money month on month, of which we've modeled into in our forecast into our customer acquisition strategy.
Excellent. So I'm sure there's an animal term for a unicorn that actually makes money. So I guess that's kind of what you're aiming towards, which is even more mythical than a unicorn, I think, maybe a griffin or something like that. But obviously you touched a little bit on that, but just sort of final thoughts before we sort of wrap this up, because I know you're a very busy man. Where do you see this the digital currency space really progressing in 2022? What's your sort of main sort of highlights that you think is going to happen?
Yeah, great question. And by the way, I'm going to write down the griffin, and I love that. I really do love that. I'm going to use that for sure. Where do I see the cryptocurrency space? Yeah, it's a good question. I feel like out of the 5,000 publicly listed companies around the world on the New York Stock Exchange, the London Stock Exchange, the Nikkei, you name them, go across the board. Out of the 5,000, there's around, I can't remember the numbers, but I think there's 40 to 50 companies that hold Bitcoin on their balance sheets out of the 5,000. So where do I see the space in 12 months time? I think there's going to be 250 companies minimum that are going to have cryptocurrency on their balance sheets. And there's going to be 500 companies in 2 years time. And there'll be 1,000 companies in 5 years time. And in 10 years time, maybe all 5,000 companies or close, maybe more than 50% will have cryptocurrencies on their balance sheet. So this is just a metric that I look at, which gives you a very black and white, idea of how much institutional adoption there is in the space. And that's where we're at right now. Right now we're at institutional adoption, and that's what's going to drive mass adoption. I think there's been an increase of, since January, the space has grown from 100 million to 200 million users that own cryptocurrency. It's estimated that that's going to grow from 200 million to 1 billion in the next 2 years, and maybe sooner if DM and these other platform tokens launch successfully. But what has that got to do with institutional adoption? Well, everything, in my opinion, because the space really took off this year when you had big news coming out from the institutions. For example, Tesla announcing it was going to have Bitcoin on its balance sheets. It's institutional credibility that drives retail adoption, in my opinion. So as we see hundreds of more companies owning crypto on their balance sheet and bringing credibility to the space, or launching their own stablecoin initiatives, that's going to drive retail adoption. So I think it starts from the top. From now on, it starts from the top. To get from this point where we are now to billions of users, it's top down. To get to this point where we are now, it's been a push from the tech world and retail applications and everything. But we're at a point right now where it's going to be a top down play. That's just my feel. I could be completely wrong, but
yeah, I think it's really interesting, and I love the concept of you using that metric of how many companies within that top 5,000 have crypto on the balance sheet. It's not one I thought about, and I actually really like that concept because, as you say, it is growing, and you can tell every time an institutional investor says, "Yep, we've got some Bitcoin on our books," then you see the retail markets and everyone else go, "Ah, hang on a minute. If so and so is doing it, that's getting interesting." So, as you say, it does. I would agree with your idea that retail space is heavily influenced by that sort of institutional investor. Awesome. Well, Sam, it's been an absolute pleasure speaking with you. I know you're busy and got things to do, so thank you very much for joining us. It's been an absolute delight talking to you and hearing about digital asset management. Thank you very much for your time.
No, thanks for having me. I hope we can do it again sometime soon.
Will do. Thank you very much.